Hi there, I'm Tyler Bollhorn from StockScores.com. This is the StockScores weekly market analysis for February 1st. Let's get right into the charts. Starting off, this is a chart of the Dow ETF, symbol DIA. The rising wedge pattern was broken last week. We've had some follow through to the downside. Today's market action makes me think we may get a little bull sucker rally here, which will probably form a falling top. That would be a confirmation that the uptrend has in fact died. It could, of course, rally to new highs. That's not what will probably happen, however, and I think it would be best to be cautious with this market right now, and any rally here would be an opportunity to get out of some stock, given that the upward trend line there was broken 2 weeks ago. Canadian dollar has an interesting chart. We've seen a pullback in the last 2 weeks, essentially down to support. This market remains locked in a rectangle consolidation. Very likely that it will bounce off of here. And if it does, I think you stay long the Canadian dollar. If, however, we can get a close below about 93 cents or $93 on the ETF, then I would be pretty cautious with that Canadian dollar because the optimistic pattern that it is in will have been broken. One thing that contributed to the strength in the Canadian dollar today was gold. It bounced off of support the way you would expect it to. However, it has not broken the pessimistic pattern that you see here on the chart. You can see that the recent high is lower than the high of a couple of months ago. And what I expect will happen is that gold will rally up to the top of that descending triangle pattern and just continue downward as I've drawn here on the chart. So I would be cautious with gold right now. Don't get suckered in by this rally, which could see a couple more percentage points to the upside, but probably not a reversal of this short-term pessimism that has been building. Chart for oil is similar to the chart for gold in that it had fallen to support and bounced. Today it had a little bit of an upside move, and I expect that that upside move will continue. We may see it continue into the sideways consolidation pattern that we've seen oil in for some time, and that would mean a pretty good rally to the upside from here. However, we should find resistance near the top of that, and the danger is that oil makes a falling top here, which would be a sign of pessimism. So watch for that falling top to form. I think good chance we have maybe 10 or 15% upside on the oil prices in the near term. However, if we do make that falling top, then we've got to take a more pessimistic stance on oil. This is a chart of the Nasdaq 100. It too broke down from a rising wedge pattern about a week and a half ago, and we've had a pretty good move downward since. It would not surprise me if we get a little comeback rally, but that will probably be what we call a bull trap. In other words, something that suckers the buyers into taking back positions when in fact the market is destined to form a falling top and a longer-term reversal of the upward trend. Now, we may see the stock market simply go into a longer-term sideways consolidation pattern. That would be also a reasonable outcome, but what I do not think is probable in the near term is for the Nasdaq market to move to new highs. So exercise some caution with U.S. equities. This caution is confirmed by the chart of the S&P 500. It not only broke this upward sloping channel late last week, but of course the longer term pattern, which was the rising wedge, was also broken. Again, decent probability that there's a little sucker rally here and then a longer term move downwards. So I would look at strength here as an opportunity to get off some stock. I don't think I would want to be initiating some longer term positions here until the market chart improves on the S&P. All right, Canadian market looks quite a bit better than the U.S. markets in that it hasn't broken down from that rising wedge pattern. What we have on the Canadian market instead is the building of an ascending triangle. Now, we should probably bounce off support here and just wind our way into this pattern for some time, but that's better than the breakdown of the upward trend line that we've seen on the U.S. market. So I am neutral to optimistic on the Canadian market. And my final chart this week is a chart of the US dollar index, a pretty decent turnaround chart. We have the rising bottoms that have formed after a break of the long-term downward trend line. I call this a bottom fishing setup. Step 1 is a break of the downward trend line. Step 2 is the formation of a rising bottom. And step 3 we got last week, a breakthrough resistance from that rising bottom. So this chart has gone from pessimistic to neutral to now optimistic, and I think better days are ahead for the US dollar. What I want to demonstrate now is how to change the chart settings in the StockScores.com website. To do so, you need to pull up what we call a quick chart, and you do that simply by entering the symbol in the Get the Stock Scores box at the top of the page. Scroll down to the tabs below the chart, click on the Charts tab, and there you will see two different chart types, one for interactive and one for quick. Now I like to use the quick charts, but no matter what chart you use, you need to be on quick charts to change your default chart settings. If I wanted to have my charts default to a 12-month setting, I need to change it here. I could make the chart also include a stochastic or an RSI, then click on Create Chart, and as long as you do this in your quick charts, those settings will save for any chart that you do from that point forward. It gets saved in what we call a cookie. Now if you want to be able to draw lines on a chart, you need to use the interactive chart to do so. Click on Interactive, Create Chart, and once you are in the interactive chart, you can draw lines simply by holding down the Shift key and dragging your mouse that will zoom in on a chart. If you want to draw a line, you click on Draw Line and drag your mouse holding down the left mouse key as you do so, and that will allow you to draw lines on those charts. If you want to start over, you simply click on that Start Over button, and again, you can draw lines, as many as you like, each time just holding down the left mouse key and dragging that line tool across the chart. Well, that has been the Stock Scores market analysis for February 1st. I hope that you have a great week in the market and trade well.